Hello folks, I'm L.A. Little, and this is your daily TA wrap. We take a look at these markets from a neoclassical perspective and ask ourselves what happened today and what does it tell us about tomorrow. I do the show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains. I also do a show on Sundays, same time, same place. It's a weekly view. We look at the market from a weekly perspective and ask ourselves what happened that past week and what does it tell us about the coming one. And the reason we look at it from a weekly view and the daily view is because if you stay on the right side of the market from those two perspectives, you'll be where you need to be long term. You don't have to know where the market's going. I say that many times. People don't really always grasp exactly what I'm trying to say. But if you know what the trend is, and there's a trend that shows up here on the site. If you know what your trends are and you stay on the right side of these trends, on your short term and your intermediate term, you're going to be where you need to be in the long term. Because they drive the long term, folks. It's not it's not magic. So what was the magic today? Well, it was the Fed saying that, hey, this economy's not ready. We're going to have to keep pushing 85 billion a month into this thing. It's not time. We had the industrials skyrocket. They catapulted. The industrials have gone up. I'd have to look at the numbers, but it is a magical ride for sure. They're back at new highs tonight, 15,677. S&P gets new highs, 20 3/4 higher, 1725.5. The composite up 38, 3783.5. The NDX up 40.5, 3231, and the Russell 10.5 higher. The Russell was the one last night telling us this market wanted to go higher. I pointed that out last night, telling you that more than likely this thing was going to try to pop the top. 1076, 1077 on the Russell, brand new all-time highs there. All-time highs on the S&P, all-time highs on the industrials. Gold up $55 today. Silver up huge. It was right across the board. You had big moves in all of these guys. The only thing that moved big down was the dollar. Down a full percent, 25 points off the UUP. Bonds were up. They're down a little bit after hours, but big moves all the way around. The only thing down today really was the dollar. Everything else moving higher. And I try not to toot my horn too much. I just make the calls and let you make the judgment. And I think that when I make these calls, I make pretty good calls. As a matter of fact, I know I make pretty good calls most of the time. And it's by tape reading. It's nothing special. But, back in August, when this market started to move lower, there was all this hand-wringing about an 87 style crash, right? The market's moved up too fast. It looks like 1987. Interest rates are rising. Fear, fear, fear. And I said back then that you need this kind of structure in place for that to happen. And what I was talking about in particular, and let me close this in and pull this up. What I was talking about in particular is you need multiple swing points to break, and not only do you need it to break on one time frame, you want it to break on the intermediate as well. That's when you can get big moves, right? This is the S&P back at that time frame, the 87 crash, how it looked, how it reacted, what it did. That structure was the structure I was talking about, and I pointed it out, and I swear it just continued to bubble, and people continued to talk about it. Even as recently as this week, they were talking about this kind of a situation. Well, folks, look at the S&P 500. That structure here, there's your swing point low. As we were up here in August and we started down, notice how far we had to go to get down there. The structure wasn't in place. I talked about it unequivocally, that it wasn't in place. That time frame I was talking about, as I was talking about it, what I was saying was and this was back here, right here as it was doing just a little bit of a dip, nothing big. I followed that article up with another one. And what I followed that one up with, and I was showing that that structure just wasn't there. And what I followed it up with, because I had some grief given to me from one of the other writers on Market Watch, and I said, don't worry about it until it's time, right? And then I went in to show other crashes, the 2000 crash, the 2008 crash. There's the 2000 crash. That's what that one looked like, right? And until you break multiple swing points, you can't get that kind of a move. I mean, it's just common logic. You're just not going to get it. I mean, the only way you can get a huge crash is you break multiple time frames. There's no other way to do it. And so I was pointing that out. People still, you know, it amazes me that everybody wants to invest, but nobody wants to invest any time into understanding what the heck's going on. And so you can see in all these charts, and I kept pointing this out as the market continued to drift lower. This was a relative strength one. I'm just kind of flipping back through these, and these are coming off the front page. They're in this column over here. You can always read this column. It's articles that are print outside of this, outside of, you know, in other, not tabloids, but other news mediums, right? This was another one. A healthy retrace is a good thing, and this is what it looked like at the time. You know, we were coming down. I was saying it was a good thing. Everybody's freaking out. You know, folks, a good retrace is a good thing if you've sold something. If you held on to everything, and that was August the 26th. If we look at the 26th, that was right, what was it, this bar, right, when we're starting down for the last leg of the retrace. You know, a healthy retrace is a good thing. Because if you sold something up here, you can buy it back here. That's the way the markets work. And if you don't work that way, you're working against yourself. That's all I can say. Now, it doesn't mean that you always sell everything as you go up. You parcel things out. And you buy things back as it gets weaker. Yeah, we've had a lot of these runs, and I'll pull it back to the weekly. We've had a lot of these runs that seem like they go on forever. Now, these little retraces, even though they don't look big, they're 2-3%. They're enough to make some money on, let you replenish. That's what a market does. A good, healthy market is going to stair step up. Now, if it goes straight up, it's a different story, and you got to be a lot more careful. But the stair stepping is what you want, folks. You can keep your risk a lot lower, and you can make just as much money. And you don't have to have all your money on the table all the time. And I say this over and over. I get frustrated because it seems like the message is lost sometimes. And I guess that's why I'm talking about it today, because if we want to talk about the markets, well, we know what happened in the markets. The markets skyrocketed today. Bernanke says we're not going to taper. Volume expands. You blow out the stops. Matter of fact, the article that I wrote last night, let me pop back in here. The article I wrote last night that ran today was exactly that. It was talking exactly about that situation. And the point is that this market was ready to blow the top, and there were stops probably sitting up there. And if they spiked it, they were going to run right over those tops. And that's exactly what they did. So at this point, what does it tell us now? Okay, so we have reconfirmation of a bullish trend twice over now. You had it here, you get it again today. That's going to break this swing point. Remember, we were talking about multiple swing points breaking on multiple time frames. Well, that's what you're getting, because if you go over here and you look at the weekly, you're getting it on multiple time frames here as well. Right? Now, a fast retrace back would be a gift. Let you get back in, right? Let you buy something if you sold it already. 1709 is that high. We traded up to almost 17. I think it was 24 or something today. Let's see. The high was 1729. So 1729. That's 20 points back down if it wants to come down. Closed at 1725. Somewhere around 1709, 1710, 1711, somewhere in there. If you can get a retrace back into there, it's going to be a buy the first time back. Plain and simple, right? But it would be good if it doesn't. Now, if it just runs straight up, that's a problem. It's a problem for people who want to get in. It's a problem for people who are already in. Let's go to the Dow. So the Dow just barely gets over the top, but it does get over it. Volume expands, same thing. This is what you would call an extended move, folks. When I talk about 2-bar reversals off an extended move, this is extended. If you get a 2-bar reversal off of this, you're gonna want to pay attention to it, right? And when we get some sort of a signal that we're going to get a pullback off an extended move, that would be the opportunity to get more serious about protecting what you have, either getting out of what you have or some of what you have, and getting potentially into some spread trades if you need some hedges. Here's the NDX, same thing. Okay, one of the things that I haven't talked about is on some of these now you have actually ABCDs up, and so you have one here on the NDX. I didn't do the numbers yet, but let's quickly do some together. 30.53 up to 31.89. That's $1.30, almost $1.40 off of this. Almost no pullback. That takes you to 33.10. We closed at 32.31. You could get 80 more points out of this thing. That's a long way. IXIC, the broad composite. Okay, so in here you also have ABCDs. This one has almost the same, it looks like. Volume expands. Now one thing is with volume expanding at the highs, and this isn't huge volume, and I don't think it was. Let me go back to the S&P. I don't think it was huge volume. It was good volume. 39.8. Where's another big bar? Here's one. Yeah, 49. So you can see it's not huge. This is starting to get extended as well in terms of an extended move. When you start to get enough volume, right, coming out of these things, then you could get a vacuum underneath it and you could get a decent pullback. Let's look at the Russell. The Russell last night was the only one telling us that this thing really wanted to go higher, and it was true, and it did go higher. Now the Russell has the ABCD up also, 1009. That's about 48 points off of this would get you to 1105, and we closed at 1076, 1077. So another 28, right? Another 28 points. And today you did top to bottom just about that. You did 22 points today. So another big bar like this would do it for the Russell in terms of ABCD structures. Okay, I can go through all of these, and I'm much more interested in maybe answering your question, because everywhere I'm going to look, you're going to see that these markets are just blowing higher. I am going to look at some special stuff. I'm going to quickly go to the sectors, and then I want to look at the OX markets. So IYT gets over the top. The SMH has already had an ABCD going, so you got an ABCD here with the breakout over the top. The SMH has already had an ABCD going, it's still going. The materials, they'd already broken out. They were hanging up there the last 3 bars or 2 bars. Big blowout move here. Now that's some volume expansion on that one. So you can see it right down the list here. They're all the same. And if we go, and before I stop this, you can see all of them are breaking out. And many of them have ABCD structures on the way up now. The ones that I wanted to point out were the 2 weakest one, XLP, going for the highs. Right? Volume expand is going up for the highs. There's 3 swing points up there. It's going to try to take them all out. And then you go to the utilities. I don't think I've ever seen a day that the utilities were up 3% as an index. They were today. That's a move. Right? Too many people short this. This is what stops will do. Blows them out. And so let me go over to the OX markets, and then I'm going to spend a little time either reflecting on other things or answering your questions if you have some. Okay, I'm going to start with gold. Gold up 55 bucks today. Okay, so the Fed's not going to take its foot off the pedal. It's going to delay that decision. Matter of fact, Bernanke, I guess, has decided that there's no reason for him to clean up the mess he's created. He's going to leave that to someone else. But of course, to hear him, there is no mess. Matter of fact, he saved the world. 55, 132.16. over this top, 132.36, not quite. It's going to take it tomorrow. It's going to go right into that little zone. There's going to be a zone build out there tomorrow probably. And it's right into it. This thing can go all the way back to the highs before it's done. When you get this kind of a move, remember, let's go back over here on the weekly. Remember, we came down and we tried to test into the high of the low. That high was 124.70. We got as low as 125.15. Got very close, right? And now you're getting the blowout move back the other way, and volume is expanding as you're going up. Folks, this is a classic kind of turnaround here, and now even the classical TA people can say, oh, we got a series of higher lows. You know, I've told you before, I like the way gold was set up, and today, you know, what can I say? It just blows out anybody that was trying to short it. SLV does the same thing. Big moves, big volume. Now, you know, I don't want to sound too optimistic here in that you're going to go straight up. You could get a little pullback tomorrow. I mean, you just had a massive move, right? And it was euphoria, right? People, you know, think about what happened. People were thinking that we were going to get the 10 to 15 billion. That was what was priced in, a reduction. But they don't do anything. And that you know, that's been fuel for the market for months and years. And so, okay, we're going to keep pushing this stuff out. Now it's all bad news is good news, good news is good news, right? You get some bad economic numbers tomorrow, who cares? Fed's just going to give you more money, right? So you're back to that scenario here. So, yeah, a little retrace off of a big blowout move. Don't expect a big one to start with. Let's get, I wanted to go to, where was it? Oh, here it is, FXE. FXE just blows out the top, right? FXE is going to go back and test that high on the weekly. That's 136, right? We're trading at 134, so that's another 2 bars like the one you see here. And then if you go to the dollar is actually interesting. It blows out multiple swing points, which got the big follow through, which is what you'd expect. But as you come down here, you got this huge bar you're going into, and you don't have nearly the volume on a weekly. I think that the dollar is actually going to get into this 57 area or whatever, and that's where it's going to flip, at least pause, even if it doesn't flip. So that's, I don't know if the FXE is going to get up there anytime soon, but you definitely got big moves here right across the bat. All right, so let me go. Bonds. We got to look at bonds. So bonds, remember, interest rates are going up. Well, not today. Interest rates are going back down. I've been talking about bonds, trying to put in the bottom. And I know everybody is, you know, on the other side of that trade, but, you know, when I see volume come into something like this after a long move down, and it's not at the bottom, doesn't leave volume at the bottom, it's like after it turns, you've got huge money coming into this thing. When that happens, and then you come back and you test on lighter volume, right? That's a setup to go back the other way. And, you know, actually put in a bottom on a longer term basis. And that is what's happening here. You can see it here on the weekly, right? Volume is going to expand as you come up on the weekly. And this thing is going to go after, you know, it's going to go after that 107.63 area, which is back up here at the swing point high. Right? It's going to go back into that, 68 actually. It's going to go back into that and try to take that thing out. Remember the last time it retested, regenerated lower, but it didn't actually make a lower low. It couldn't get lower. That's a telltale sign this thing's turning. If you're not in bonds, if you want to play something, this is not a bad place to look. You just got to catch any kind of small retraces, put your stops underneath it, and let it run. All right, question on GD. Let's see what GD looks like. So General Dynamics, defense industry, I think we looked at these, or looked at this a couple days ago or something. Let's see what it looks like now. Yeah, it's still blowing, it's still working higher. Yeah, I don't remember when we looked at this. Hopefully what I said at the time was that you'd like to catch a retrace into support, because it did give you that yesterday, and then today is a little bit more up. You know, folks, I don't chase moves like this. I'm either positioned for them already, right, or I wait. Now this one is not that far up. What you'd have to do is look at your ABCD structure. How much is it? 83.76. You got as high as, now let me see. You actually don't have an ABCD structure to work with. So you have to do a range trade breakout. So that's 88 roughly, and I'd probably take this as the bottom. So that's about 83, so it's about 450. Anywhere from 450 to 5 over the top. That would get you up to about 91.50 or so. So somewhere around 91.50. It's trading at 90, roughly at 90. So, you know, the problem with this is, like, where do you put your stop? Do you just go into it and you put your stop up under? I mean, you almost have to use this wide price spread bar at a minimum, which would mean your stop's down here somewhere. So I don't, you know, it's just hard to make risk reward make sense here, and I think you're going to find that on a bunch of these stocks now, right? It's going to be hard to make an entry on them, and if it's hard to make an entry, you have to do one of two things. You either got to wait, or you got to expand your time frame, right? In other words, I'm not playing a daily chart, I'm playing a weekly. So if we go look at the weekly, for example, on this one, right? You can always make a trade, folks. You just have to figure out what the trade is. Like here is your this one actually has an ABCD structure. Bottom of this one 75.60. Your top was 87.85. So what did I say? 75, 75.60, 87. That's about 12 points, right? So 12 onto here gets you about 94. So on the weekly, about 94, you're trading at 89, so that's about $5 on the weekly you could get. Okay, so where do you put your stop? Well, on a weekly, now that this is over this high, you see on a weekly it's always going to be deeper, but you could do this a different way. You could come in here and say, okay, I'm going to trade this for the 94 move, and I'm going to put my stops up underneath this week's lows. And that's not the highest probability trade, but it's not a bad one. And if you did it that way, you're shooting for 94, and you got your stop back here at 86, and you're trading at 89, so you're risking 3 to get 5. Even there, you don't have the 2-to-1 that you're usually looking for. So I can't even, you know, I'm trying to use a different time frame, and I can't get this one to trade, the parameters to trade. So, and I think you're going to see that on a bunch of stuff. It's not just here. Question on LQD, JNK on this TLT turnaround. Yeah, I'm sure they blew out today. Let me pop back over to the Ox markets. I'm sure junk bonds, the LQD, all these guys are going to run like crazy because, you know, equities all of a sudden are in favor, and Bernanke's going to support them. Yeah, I mean, look at your junk bonds. Volume expands, you blow it out. Remember, we got the 2 highs here. We'd already gotten over multiple swing points. Well, this is what happens when you get them. I think I even mentioned this one last night, that it was set up to try to run. It's going to try to run up into here. See, the problem is look at it. You're almost there. You know, yeah, I can get to the top. You know, so maybe it can get to 40, what is it, 40.77. You're trading at 40.26. I don't know, folks. Again, unless you buy them when they're weak, you know, it's hard to chase these things. If you're gonna chase them here, you're gonna have to get your money and get out, right? Because you just don't know how far it's gonna go. And if you buy them up here and you just hold them, I can guarantee you probably they're gonna come back to wherever you bought them or lower, and then it makes it harder to buy more. So, to me, you either have to expand your time frame, and again, here, if we look at this one on the other time frame, weekly. Yes, here on the weekly, you might be able to make the argument it can get all the way back to the highs. You just have to play it with a different stop. As a matter of fact, actually, this one's not too bad on the stop. So So you got your big bars high at 39.79. You got this week's low at 39.73. So you can put your stop in there around 61 or something, and you can shoot for at least this swing point high or the very highs. That one you might be able to make sense of. GDX, GDXJ, yeah, those guys were huge movers today, to the tune of like 8 or 9%. This was a big move. I mean, gold up 55. You know these are going to move, and then stocks are moving as well. So this is GDX. GDX up huge. It's got the volume. This one's going to the top. So here you could probably make a play on it. Let me see if the small cap miners are the same. They probably are. Yeah, again, same thing. So you want to try to find any kind of retrace and buy them. And you know, again, you're going to have to put in you're going to have to play them on a weekly basis is the problem. And you're going to have to do that with most things. So GDXJ actually has a huge volume bar there. It's probably going to stop it on the first try, 51.16. So I don't think that one looks as good. Let's see what the GDX looks like on the weekly. Yeah, I got the same thing. Now this one's going to have the volume though. So this one will have the volume to go up there and attack it. If I were playing one of the two, I'd probably just go with the large cap ones. They're more liquid, and it looks like they're going to have a better shot. At top is 30.94. We're trading at 28.25. So 270. That's a 10%, right? I mean that's a pretty big move. So yeah, and just the hard thing is where do you put your stops? Well, you just have to. I would go intraday and see where what it looked like when it took off. Let me look at this intraday. GDX. Put it on a 1-day, 10-minute. Yeah, so you had a nice big 1-bar takeoff. So the way I would probably trade this thing if I'm going to trade it is I'd use this area as my area on a short-term trade, right? And put my stops down in here somewhere, right? It really shouldn't come back down there. I mean, it shouldn't get back to 26.75, for example. So $1.50 lower, and so you risk $1.50 to try to gain 10%, and yeah, that's all right. That's a 2-to-1. Gratz on the article this morning. Pop the top, more pop than expected, but still as expected according to the tape. Fred and everyone, and I said this as I started the show. I'm kind of modest in my ways. I really don't try to toot my own horn that much. I let my work speak for itself. Folks, I've written 3 books at this point. I don't take this job lightly. I've done this for many years. I'm working on 30 years at this point. So, when I say something like this, and I've written these books, Money Management, Neoclassical TA, How to Find the Best Trades, right? That's the way these books are laid out. They're not rocket science. There's nothing, there's nothing magical about them, and there's nothing difficult about them. The concepts are simple, right? The issue is that nobody has introduced anything to this discipline of significance, in my opinion, for some 80 years. I mean, yeah, there's been Bollinger Bands, there's been a bunch of various algorithms. We've had some decent stuff with like ATR, I think is valuable in terms of volatility. There's been some work that has been decent, but I'm talking about major work. I believe this is major work. I mean, and I truly believe that. Tape reading is what Livermore used to do. This is tape reading, folks. It's looking at supply and demand, finding out where it is, understanding where it is so that you can benchmark against it when you come back, on a test. The market moves as a result of test. Price discovery is test. That's all it is. You need a way of understanding where supply and demand meet and what they do when they get there. That's what neoclassical is all about. It's about trend for direction, anchored support, resistance, supply and demand for your timing. Folks, I hope you had a great day. I appreciate you being there. You tell a friend, tell two. As always, I'm L.A. Little, and this is and was your daily TA wrap. You have yourself a great night, and I will talk to you next time. Good night, folks.